presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yeah, Sid, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best, but don't overdo. When you overdo, you deplete your body and go against yourself, and it'll take longer to accomplish your goal. Market-wise, let's take a look at it out here. We have the Dow Industrials up 440, Nasdaq up 252, S&P's up 77. Gold contract trading down $12.40. Let me get this 1 second. Here we go. $12.50 trading at $2,432 an ounce. We have silver flat, $27.16 an ounce. Light sweet crude up 27 cents, $73.21 a barrel. Notes and bonds. A 10-year note down 23 ticks, trading 113.11. The 30-year off a full point plus 24 ticks at 123.21. And King Dollar. King Dollar right now is trading. Where is she, man? Trading up 3.19 at 103 flat. Euro is 109. Yen is out here at a price point of 145, and the British pound is 126 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, bottom line, as I said in the update, we didn't have any sells. We had an early sell in the morning, but it came right back. This being said here, when we take a look at this, we'll just check this out, man. This is pretty wild. Okay, so what you had here is this. The last time that we had any volume up on the spot and on the E-minis is 52.68. And we made it to 53.42. You can see climb, nothing, and then ba-boom. Now, this last bar, folks, okay, this is really a ba-boom. 56,000 contracts on this last bar that just came down. So what this is saying, coming into the close, you can actually get down into that lower level. We go to the NQs. We take a look at the NQs because the choices that are going to be made coming into this close are going to be pretty intense for people that are long and or short. Now you can see, look at these NQs, man. Someone is unloading these things in a monster way. Let's see, what do we got here? How many minutes? Okay, so we just finished a 10-minute bar. Look at that bar, man. That bar is a monster, man. 17,000 contracts. So in the NQs, the game is 174. 18,174 is actually game, which is pretty wild, man. You can see this whole sideways move up here just had nothing. But that is what normally does happen when you get these bounces. You know, if we take a look at what you will see is that when you take a look at you can't expect any of the ETFs to have more volume than on the way down. This is to me, this is a bounce. These lows are going to get tested. You know, we'll see what kind of a bounce we're going to get. But the bottom line is that what we did just now, today, meaning we came up to the lows of Friday's bar. And this is where we're going to reject them. Well, it's not 4 o'clock yet. We did reject them thus far. That's only the last 10-minute bars. Gold. We look at the gold contract out here. We have with the gold contract. I suspect What the gold contract wants to do, folks, is get into the lower end of this consolidation. And I suspect that's right where we're going to go, meaning, you know, the 2350 area. We came down with volume yesterday. They held good. Okay, the gold equities held good. The gap lower on the open. They came back. They held good. But the bottom line is that when you have a market that wants to basically get to lower price, okay, what happens, period, is that you're going to get the good babies, the bad babies, all of the above. As you come over to our website at TFNN, we get a special going on right now on my Market Insights. That's the daily newsletter, folks. You can take a look at it under Market Insights. It's 75% off for the first month. And what you're going to see here, by the way, whether it's Market Insights or the Gold Report, if you hit the Market Insights, what you're going to see the full record for 2024. So right now, Market Insights is up 82.9%. You'll see every single trade there. Now, we have done the same thing is on the Gold Report also. But for Market Insights, if you'd like to basically take a shot at it, it's 75% off the first month. And what you're going to do is don't forget to use the code MI75OFF. Hold it. I don't get that. 1 second. Yeah, okay, so what this says here, folks, there's a typo here, because it's 75% off, not 25% off the first month. It has 75% to save 25% in your first month. You're saving 75% in your first month. That's the bottom line. 877-927-6648. Oh, I know, we want to go into notes and bonds. So check this out, man. We check out the note and bond market. So what we had yesterday, you went higher. There was 3 million shares, 3 million contracts, rather, I believe, was yesterday. Yeah, we did, 3.9 million contracts yesterday. The day before that, which we're coming into, we did 4.2 million. We're backing down, and we're backing down with 2.3. Now, what I suspect, I think we're going to get a little bit lower here. Probably the lows of Thursday. Even lower than that. We can get down to like the 112. And as long as you're coming into that area, if it's coming back with lighter volume, bottom line is that that's still saying that the market wants higher price, lower yield. We take a look at the 10-year right out here today. It's 3.881. That's how we're shaking it out. We go into the oil market. Take a look at oil. The oil market right now is trading 73.14. This is at the lower end of its consolidation. And it's got big volume from yesterday, man. This thing's going to get tagged again. That lower yesterday is going to get tagged, man. Some of the higher volume equities that we have out here today, you have NVIDIA's up $5.50. You got Palantir up at $270. Intel can't, no love at all. Intel's flat. You get Advanced Micro up $4. What else we got here? Stay right there, folks. Dow Industrial's up 528. Nasdaq up 278. S&P's up 88. We're coming right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading up 476. You get the NASDAQ up 264. S&Ps are up 81. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, it's very easy to get The Opening Call, folks. You come over to our website at TFNN. Go into newsletters. You see it right on the left-hand side. You hit that button. You get The Opening Call for 1 month for $149. You get it for 6 months for $695, which is a savings of $199, or 22%, and 1 full year for $1195, which is a savings of $593, 33%. They all come with a 30-day money-back guarantee, and on top of that, Basil has approximately 14 archives out there, so you can go through these archives to really understand how the market moves and how that Chapman wave rides these waves. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing good, man. Yourself?
Very good. Thank you.
Good. So, market-wise, I mean, we have volatility. There's no doubt about that, man.
Absolutely. We have volatility. And what's really interesting is, let me just show you something here. This is the volatility index. The VIX index, VIX.
Yes.
X. Let me just get that. Okay. So, in yesterday, it hit 65.75. And the speed with which we went from just earlier last week to the acceleration yesterday, with all the news that was going on and the fear in Japan this and carry trade that was 65.75. That is, if you think about it, the COVID low back in March of 2020 was 85.47. And that was real. I mean, that was something completely different. That was building up, and that was something that we didn't even how it would unfold. That was the coronavirus.
Yes.
So, and that was with business and the Fed. It was a whole bunch of things going on. So my assessment was, as we were skyrocketing to that high, that we were making some kind of a low yesterday. So it allowed us to get into the Dow position, a long position, actually a kind of aggressive position. But at the same time, I needed to see how the close unfolded. We really didn't know how it would close. And in fact, the Dow did close down 1,000 points. And let me just go to that. So it didn't show that reversal. You and I have watched this over the decades, how those V-shaped reversals, everyone is just throwing all their stocks out one day. And if let's say they threw something out at $85, and it goes down that day. It goes down even further. But when the V-shaped pattern turns around, within the next day or within 2 days, they can't get it back. Even if they could pay 125, that's how those V-shaped patterns unfold. They are vicious, and the prices that were at the low of the previous day, you just don't see them again for a long time. So the way we closed said to me, we aren't quite in that situation. It was exacerbated mostly by news events and the media. So I have to take it as that's the price, 65. But the actual climax itself wasn't as intense as we usually see it in terms of the build-up going to that. So that's just one thing. So that says there's a particular pattern that I follow. I discovered this years ago. I've been using it, and my subscribers know about it, and I've mentioned it in the den many times. It's where I'm looking at a price, and I talk about earthquake and aftershock. So you can get the earthquake, but the aftershock sometimes can be more intense. So it could be a lower price, it could be the same price, or it could be greater. So what we're looking at is, in these particular patterns, I call this the Dark News Index, DNI. And most of the time, up until this year, those peaks that were made with that, what I call the inside, so this is the let me just get this right. This is the internal low and the residual low, and on the top it's the residual high that comes in after that left side high. So this is really important because we made lows in April. We made this double bottom, and all the other tops that were made were with interest rates going much higher. In this case, the rates weren't all that high, and then all of a sudden they started to fall dramatically. So inside, this is the IL right here, internal low, residual low, and then I said on the 18th of July, which is also the day that the Dow made that round number high, an exact round number high, which is very unusual, and then turned down, that there could be a double top, and that would be the residual high. Well, what happened is we did get that with a very sharp pullback, and I'm calling this, you see this trend line right here?
Yes.
I'm calling this the internal low, and we'll see whether or not we get a bounce, and then we make a residual low, either high or low at the same level. I'm suspecting it could be a little higher. So that's the one thing. So I'll put the two aspects together. That's the volatility index plus my internal low and residual low. I've got this as an internal low, and we went long yesterday. So we'll see where this goes. But here's another trend line. And this trend line says that the low that was made 3 days ago at 39,358 in the Dow. What was the high today? 39,449. I actually mentioned this in my show this morning. I said, I want to see us touch it, but preferably within a day or two, close above that high. So we're in the process of trying to do that. So that's the one thing. The other is we're looking at, I was talking about the small caps, and the small caps showed yesterday through its action yesterday that the 200-period moving average, this is the IWM we're talking about,
yes,
got hit. But actually the rebound was very strong. And I thought, well, if we're all done with the small caps, and we've been long that for quite a while, what would happen if there is a sharp sell-off like there is? Well, they responded very well. And look, even today, they're up almost 2% at 206.05. So we've been long this. We took profits, and then we got out yesterday, and we got a new position today. So I like that as a bounce. So most of this I'm looking at, and I'm saying this is a work in progress. You've got some of the aspects that I'm looking at. Different sectors are rallying quite nicely, but we have to have follow through. In other words, the give back that we have right now. Let's just go to the Dow, for instance. Really, 39,000 should hold on any pullback in the shorter term. I like what we saw. I think that we made quite an important low. I call it a low, maybe not the low. The SMHs, the semiconductors, even they are participating, but I think that they still have a lot of work to do to really build up the kind of move that they had earlier on. So this is very selective, and I think if you're able to pick the right sectors, it could be a very nice rally for the next few weeks.
And folks, it's very easy to get Basil's newsletter. Come over to our website at TFNN, and you're going to see it right on the top, newsletters. Hit that button. It's on the left-hand side. You're going to be off to the races. You just hit that subscribe button. Basil, you have a great one, a safe one, and of course, we look forward to the show tomorrow morning.
Thank you very much, Tom. You too.
Have a great one. So let's go take a look at we got down and Qs. Dow's up 606, Nasdaq's up 314, S&Ps are up 97. Stay right there, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow Industrials right now up 565. Nasdaq's up 300. S&Ps are up 95. Let's get over to our man, Mr. Tim Ord, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Ord, what's going on, brother?
Well, we did have panic yesterday, and we. So
yes, no, go ahead.
We can look at those charts. Chart one, chart one. The top window is the 10-day average of the trend.
Yes,
said this in the past. When the 10-day, which is basically 2 weeks of trend readings on the close, gets around 1.2 or higher. Normally, you're going into a low. Sometimes it goes way past 1.2. I think Friday we closed at 1.21. Yesterday we closed at 1.2. So anyhow, that met the parameters. And the bottom window is that 2-day trend we talked about.
Yes.
So the 2-day trend needs to be 1.5 or higher. That's the average. Or in other words, the 2-day trend needs to add up to 3.
Yes.
And yesterday I think it was 3.16.
Yeah, I had 3. I had 1 point. It was what 1.54 and 1.46. I got 3 anyway. Yeah. Well, that was.
Yeah, you got 3.
Yeah, that was not. Let's see. Because yesterday was 1 point. It was the 2 days prior to that. Yeah. Right. Exactly. Right.
Right. So that worked out. Then next window up. It was kind of. The third window down is a 21-day trend.
Okay.
And it closed yesterday 1.07. So that's a month of trading, and that's the one you really like to have up in the 1.2 or higher range, because that's a longer-term bottom indicator. These other two indicators are more shorter term. But still, you got enough panic, at least on a short-term basis, is just a bottom. I said before, I think we're in a trading range here.
Yes.
And the reason... one of the reasons why is because the 21-day trend, which is a longer-term trend, projects at least a month rally, if not, a lot of times a 21-day trend of 1.2 or higher, a lot of times they come at major lows, and we don't have that here. So I think, a rally starting. Let's flip to chart 2.
Can I just ask you a question first? Because I believe what you're saying is this. Because of the 21-day trend, because we didn't get to 1.2, you're looking for a rally, but not a major low. Would that be correct?
Yeah.
Okay, cool.
Well, I'm thinking, I think we could be at a significant low, and at worst case, I don't think there's more downside than what we saw yesterday. I just think we're going to go back up and maybe come back down to this current low sometime in the next month.
Right, I got it.
That's what I'm thinking.
Yep, I got it.
So
okay.
I think this is more of a sideways market. It went a little bit deeper than I thought it'd go. But, sometimes they shoot over, shoot over below some important areas. So, but let's look at chart 2.
Okay.
And this is all the short-term stuff. Anyhow, the bottom one's a 3-day. Next window up is a 2-day average of the trend. Next window up is a 5-day average of the trend. Top window is a 10-day average of the trend. And all those, 2, 3, 5, and 10 days all hit in bullish territory yesterday. So you had a pretty, a worthwhile time frame for hit at least a low that may, last a month, maybe, I don't think 2 months, maybe, I think this rally will probably go into September. And from there, I don't know. But you got enough panic to get things going. Here's another indicator. I might go a little bit too fast here, but let's look at 3.
Okay, I'm ready. Here we go. Yep.
Okay. So, we got panic in the market. We proved that by the trends and several different moving averages. And this one's starting to is a Zwag breast thrust indicator. It's a mouthful. But we talked about this before. Matter of fact, last time we talked about that was basically April.
Yes.
And it didn't quite meet the parameters. But the definition of the Zwag breast thrust indicator is the advancing issues over total issues with a 10-day average. And to get this thing triggered, you need a reading below 40. And yesterday, we did have 4.40 right on the money. And within 10 days, it needs to get above 0.6 or get to 0.6 or higher.
Okay.
And it has to happen in 10 days. So you have to have panic in the advanced decline or advance compared to total volume.
Yes.
Then you have to have a sign of strength to get to 0.6 within 10 days, 2 weeks. And so you get a panic situation, then kind of like a buying situation.
Right.
And that's what comes at major lows. Sometimes you'll get 2, 3, 4 of them. Sometimes you just get one. So we may be working on one right now. It depends on this current rally. So in the next 10 days, from August 5th, that would be started yesterday, so it would be August 19th.
Okay.
Would be the date that this reading on the Zweig breath stress indicator need to get 0.6. Now, if it does, chances are you're looking at another significant low again, similar to what we had in the past when this indicator triggered. And how high is high, you don't know, but, chances are we could probably break new highs. Sometimes you get, if you go back and look in the 2020 area, we had, and part of 2023, that bottom area, we had 3 in that area, which is really a extremely bullish signal. But the market kind of just flipped sideways. I think something may similar happen here because I'm actually pretty bullish. I think, you'll see new highs, later this year. But between now and October, I think you may go back up, you may come back down, test this low. Then the real rally maybe starts in October, is what I'm thinking.
Yeah, and if this is a trading range, man, it's one heck of a trading range, which is awesome.
Yeah, it really is. I mean, it's my subscribers, we're up about 20% this year, and the market's up about half that.
Right, and you went long on the close last night, right?
Yeah, I went on and closed last night.
Nice
covered
move.
My position last Friday. I could have waited another day, but I don't know. It's hard to 2 days, 3%. That's hard to walk away from.
No, for sure. Well, you know what's intriguing here, Tim, is that normally, you get a downdraft. Okay, so let's say we got the downdraft. But in this particular downdraft, man, it was so fast, and we already come back 95 S&P points today. I can see that, I understand, the trend, people got nervous, but it's like, I just don't know how many people actually got, they got sold out of the market yesterday. You know what I mean? Because we come back so quick. You know what I mean?
Yeah, I think we're going to talk about the bottom here, so when we come back.
Okay, you stay right there, folks. Tim and I are coming right back. Dow's up 550, Nasdaq's up 290, S&Ps are up 92. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Tim Wood, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow up 550, Nasdaq's up 280, S&Ps are up 90, and I have the third chart up, Tim.
Right, okay. Well, yeah, this is a chart to watch, so 2 weeks from now, August 19th, we're up 0.6. That gives quite a bit of credit that the market's going to hit new highs before the year's out. That's what I'm kind of using this indicator for. But, we can go straight up, hit 0.6 on this indicator, and the market, tests the previous highs and come straight back down again. That would have reinforced the idea this market is probably in a trading range. Will we go back down to yesterday's low? I'm not sure, but it could be kind of violent going back and forth here. So
nice.
Right now, I think there's a good chance of a V bottom. So let's flip to chart 4. It's the reason why I brought that up. We talked about this chart in the past. This is the SPX tilt ratio. So this is the whole market. You got the equity market and you got the bond market. So that's, trillions of dollars here that you're looking at. So I use a ratio because the bond market is like, 100 times bigger than the equity? I don't know what it is.
Yeah, no, it is. It's 100 times bigger. Yeah. It's trillions.
Right. I don't know what number it is, but it's huge. So anyhow, I did a ratio and messed around with it. And anyhow, come up with an RSI 10, not a 14, but an RSI 10. And when this ratio, RSI, falls below 30, usually you're at some sort of a low. And a lot of times, they're a lot of times multi-week lows. Sometimes they're multi-month lows. But it does help define really panic on a short-term situation. But what's different about what the current the RSI yesterday hit 14 on the 10-period SPX tilt ratio. So that's pretty unusual. So I went back in time and looked at other times, went back to 2015. And a lot of times when you get down around that 14 RSI reading on this ratio, it's a V bottom.
I see. Okay.
So not all of them, but I kind of eyeballed it. It's probably at least maybe 3 or 4 of them weren't, but 20, 30 of them will. So about 80% chance, I'll put it that way, that yesterday's low on a short-term basis is probably not going to be tested because of this RSI getting so low. So they really dumped on this ratio really hard yesterday. And it's a short-term bullish sign. It's actually one of the reasons why I stepped in the market yesterday, because it's hard to get very few readings get to around 14 or lower.
I see.
So it was pushed too hard to the downside. Plus, you had the trend readings and all this other stuff.
Right.
So I thought we go up, come back down. This is a base building period, but I'm thinking yesterday's low, we're going to have a rally first, then maybe come back later, maybe September, October, we visit this low again. But so
Okay, cool. Hey,
so we go up here, so it'll be something to watch for.
Let me ask you. We got a pretty cool question here, I think, about some of your ratios, right? And what the question is this. Let me just go through this first. Can you ask Tim about the VIX/VVIX ratio and the TLT/VIX ratios? So what the question is, Tim, is that this trader is saying, using live data, I have them both taking out the 2024 and 2023 lows, and the TLT VIX ratio is below everything but the COVID low. So what the trader's question is this: if these indicators take out all those swing lows, does that anticipate that the market would catch up and do the same?
Well, yesterday's, I think the VIX didn't get to 60 yesterday, interday.
85, I think, yeah.
85, okay. I
think.
The VIX is, another panic. I did a lot of stuff with the VIX.
Yes.
And I do that, SPX VIX ratio. And I think I did that tilt VIX ratio thing also. I don't have that
65. Sorry, 65. It was 65.
I'll have to look, actually, I'll look at it Thursday.
Okay, cool. Awesome. Thank you. That's awesome.
All right. So is VIX tilt ratio?
Yeah, he's looking at the. Let me just get the question so I get it. The VIX/the VVIX. Remember, you get the VIX, then divided by the VVIX.
VVIX, yeah. I think I looked at that one too.
Yeah, you have, because you've brought that to us in the past. Okay, cool. That'd be awesome if you do that. Thank you.
All right. Then what? Then you had a VIX tilt ratio too, or
yes.
something?
Then he had the question about the TLT/VIX ratios. What he's saying is that they took out the lows of 2024 and 2023, and not the COVID low. I believe what he's saying is that, okay, if they took out the lows, would you expect the market to go take out lows too? Would the market catch up with it and do the same thing?
Oh, okay.
Yeah, a little bit. That's a different question, right? I mean, because
everybody's kind of bearish here. So I don't know. I think the downtrend's over. I think the worst case scenario is to test yesterday's low, but I'll take a look at that.
Cool. That's cool.
I think I was messing around with those ratios, and I didn't come up with. Sometimes you stare at them for a while, and all of a sudden it pops out. Yeah, this is good information.
I love it. Yeah, it's a fact.
It doesn't. I can't figure it out. But so,
cool.
Let's look at the gold market real quick.
Okay, let's do that.
Here.
I got the next one up. Okay, I'm ready.
All right. These two, I'm doing a lot of stuff because it works. Is the cumulative advanced decline and a cumulative up-down volume for GDX, and I got on the monthly, which gave a bicycle on May 31st. And I got on the weekly, which gave a bicycle on March 18th. And so I kind of looked at the daily, and the Bollinger Band seems to work really well. But it's good on the daily. So the charter number 5 looks at the daily, and it does really good on divergences. The pink area, last divergence we had December of 2024, the GDX, which is the top one, was making higher highs, and both those ratios are making lower highs. That predicted a short-term high. Then May through July of this year, GDX was falling back down, and both those ratios went sideways. And now the current blue, or the light blue area, GDX fell down, and both those ratios went sideways.
Yes.
So to me, this is positive divergence. If you notice those ratios, the up-down volume of all the up-down volume works better than advanced decline. I don't know why. It just does, because it gives the most true signals. But it made higher lows yesterday, yesterday and today, and advanced decline made match the previous low. So even though the GDX is falling back down, the ratios are actually dailies are giving a positive divergence here. So I think both markets, what I'm saying, are probably going to go up here, the equity market and the gold market.
Yeah, it's pretty amazing. Yesterday in the downdraft, you had the gold equities, go down at the open with everyone else, but man, they came right back. I mean, they gapped down and then they came back, and they were strong, man. I mean, they were strong for a market that was down 1,100 points. Let's put it that way. Stay right there, folks. Tim and I are coming right back. We have the Dow up 451, Nasdaq up 252, S&P's up 77. Tim and I coming right back, folks.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's up 370, Nasdaq's up 213, S&P's up 64. So I just jumped to the last chart, Tim.
All right, so the daily charts are positive divergence, and this is kind of a repeat. This is that we talked back in the bottom window is the monthly up-down volume. Next window higher is the monthly advanced decline. Both of them are cumulative. As long as those two indicators remain above the mid-Bollinger Band, you got a trending market. So in general, you know, the correction phase is done that this indicator gave a sell signal back in January 2021, flipped to a buy signal on May 31st of 2024. Chances are we're going to, in general, move higher over the next year and a half because that's the average time, or longer. The average minimum time of this type of signal was a year and a half. So this was probably going to go into, November of 2025.
We can get our head wrapped around that, man.
Yeah, so you're going to have, you're not going to have large corrections. You're going to pretty much just be impulse. It's going to be an impulse wave. This is, month to month, not every month's going to be up, but you're not going to have any 40% corrections or anything. You may have 10 or 15% corrections, but in general, you're going to move higher. And the bullish percent index for the gold miners index is up around 80%. So 80% of the stocks are on buy signals. So that should continue for a long time. So I'm thinking this is going to be similar to the 2000 low because these signals are pretty rare.
And we also got, Tim, let me ask you this. About 3 or 4 months ago, remember, I forgot whether it was the ZAG indicator, but we had got an indicator, one of your indicators, that like next year, this coming year was supposed to be really strong, right? Cool, man, cool.
This should be a real. Everything's going to move. The penny ones that are not quite bankrupt, they're going to come back. I think it's going to be a good. It's going to be good.
Well, thanks so much, man. We'll talk to you Thursday, folks. Have a great one. Good. Have a safe one. I'll come right back when we do the update.